Hello and welcome to another update video about Natgas. So on the Natgas chart, situation is unchanged. The local downtrend is still unfolding from the top here that formed in June. The idea is now that this here is the stress test for the bullish scenario. So we have in white, this is basically what I would call the short-term bullish count, in which we have a 1-2 setup where the wave 2 bottomed in April, a third wave rally which topped in June. This would now be a fourth wave correction, no sign of wave 4 being over, and then a fifth wave to the upside could still follow. However, what needs to happen for that scenario? We talked before about the wave 4 as a more extended ABC as an alternative. I'll take that off the chart now because it's now come down low enough to consider the wave 4 as basically being done in a direct fashion. A, B, and we're now in that C wave. We still haven't seen a fourth wave corrective already. I'm going to talk about that in a minute. But yeah, what needs to happen for the short-term bullish count? Well, we need to hold the $2.06 level. Ideally, even $2.24, but definitely $2.06, because any break below that level will likely lead to another low, or at least it will not allow me to confirm a low in place here in February. I need a 5-wave move up, then at least I could consider this as a diagonal pattern. Until I see 5 waves, this is considered a 3-wave top, which could easily lead to another low. And the $2.06 level is the pivot between the short-term bullish and the short-term bearish scenarios. Okay, locally, price action is bearish. Yeah, locally, micro patterns are bearish. We are forming lower lows and lower highs. And until I see a break above resistance, there is no fifth wave, okay, and no low in wave 4. So it's basically watching for lower, especially as long as we stay below the trend line. It has enough touch points to be relevant. And lower against resistance, which I'm now adjusting because we've made a slightly lower low. So this is now the updated resistance area. It's between $2.45 and $2.59. As long as the price stays below it, I consider any rally as a wave 4 corrective rally. And then one more low is still expected in wave 5 of C or 4. Now it can always turn around early, then it would be a WXY structure here to the downside, which could have bottomed already, but it takes a break above 259 to confirm. And if we get a break above 259, we can start to begin the process of tracking the wave 5. As long as we stay below 259, there is no low in place at all. And we have to consider that we might see a break below $2.06. So my commentary from previous videos remains very much valid and relevant. The wave count hasn't changed. The scenarios haven't changed and the levels haven't changed. Just the micro resistance area has changed. And one more low is still very, very likely for various reasons. One reason is that this decline into the February lows was just a 3-wave move down. And this would have been ideally the last low. Okay, we could always think about maybe a truncation where this is actually the lowest low, but that's difficult. You know, it's just acceptable in exceptional circumstances, so I won't consider that primarily. But yeah, again, all eyes need to be on the next support levels, $2.24 and then $2.06. That's my update about Natgas. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.